Welcome back to our weekly update. I'm Charlotte McLeod with the Investing News Network, and I'm here to give you a quick look at our top stories for the week. We're going to start with uranium this time. If you've been following along, you'll remember that the market has been in the spotlight since the Sprott Physical Uranium Trust came onto the scene and started buying physical uranium. I recently spoke with Justin Huhn of Uranium Insider, who took the time to explain where the market could go from here. He's not a fan of making price predictions, but he did say the commodity could absolutely rise as high as it did during the last cycle. Justin also identified a number of factors that may be going unnoticed given all the Sprott Trust excitement. Notably, he pointed to the full-blown energy crisis happening right now in Europe and in other parts of the world. In short, even beyond what's happening with the Sprott Trust, he thinks market fundamentals look very positive. The link to the full interview is below, and if you're interested in the uranium market and the mechanics of the Sprott Trust, I really recommend you check it out. With uranium in mind, we asked our Twitter followers this week if they're investing in uranium explorers, developers, or producers. The poll was ongoing at the time of this recording, but developers were in the lead. We'll be asking another question on Twitter next week, so make sure to follow us and share your thoughts. While uranium is stealing the spotlight, we can't forget about gold. This week brought ups and downs for the yellow metal, which started the period around $17.60 per ounce before dropping to about the $17.25 level. It was just under $17.60 at the time this video was recorded. Unfortunately for gold, that means it's finishing up the third quarter fairly flat, although it did move both higher and lower during the 3-month period. Looking forward to the fourth and final quarter of 2021, many market watchers still think gold could make a big move. I had the chance to speak recently with David Garofalo, who was at the helm of Goldcorp when it merged with Newmont, and is now in charge at Gold Royalty. In his opinion, when gold hit $850 in the 1970s, that was the real all-time high. And when that number is adjusted for inflation to today's dollars, it comes to $3,000. David thinks gold will reach that point during this cycle, and he doesn't think it will take long. Here's how he explained it.
I see no reason in this inflationary environment, and this is not transitory. I don't believe that for a moment. I believe inflation's here to stay, and it's going to rival what we saw in the 1970s. And perhaps surpass it given the coordinated effort that's being occurring across all the central banks globally to base currencies competitively and preserve export markets. You know, gold at that time achieved $850 an ounce. That was the real all-time high, believe it or not, because if you inflation adjust that to today's dollars, that's $3,000 an ounce. That's what I foresee in this cycle in the short term. I'm talking about months, not years away.
That's all for this week. If you like this video, make sure you subscribe to our channel and turn on notifications so you don't miss future updates and interviews. You can also follow us on social media or click below for our free report or any article mentioned in this video. We'll see you next time.